Tunisia's Apex Bank said it's aiming to counter inflationary pressures and to avoid an acceleration of inflation and a widening of the external imbalance, which is expected to widen to around 10% of GDP in 2022, against 6.8% that was initially forecast. Economists warn that when interest rates increase, it affects the way consumers and businesses can access credit and plan their finances.
The inflation rate is over 7%. It's around 7.5 to 7.6%. The key interest rate must cover the inflation rate. It's unacceptable to finance with credits below inflation rate. In this case, the interest rate won't cover damages. It also aims to reduce growing demand on liquidity in the financial and banking sectors that cause higher prices and inflation.
Some economists have argued that higher interest rates reduce demand for goods and services, which makes it harder for companies to raise prices. However, other economic actors in Tunisia say the recent decision will cause the opposite reaction from the market.
We understand the central bank's decision to raise the key interest rate by 75 basis points, but this is an additional handicap for companies, investment and ordinary consumers. Higher interest rates means higher prices and cost. Now our loans will increase and consumers will also pay more. This will slow down and not revive the economy.
Tunisia's Najla Boudin-led government says that raising the interest rate was necessary following a rapid and widespread acceleration of inflation in the world. Authorities in the North African state have said they will support the industrial and the economic fabric during this difficult period.
It's certain that raising the key interest rate will impact the economy and the industry. We wish the interest rate was at the lowest level, but we all know the current national and international economic situation. Tunisia is not isolated from the world. The state now aims to help industrial companies and SMEs cope with the rise in key interest rate.
The Apex Bank says raising the key rate to 7% would result in an increase in the deposit and marginal lending facility rates to 6% and 8% respectively. The central bank also decided to raise the minimum rate of return on savings by 100 basis points to 6%. The bank's executive board had lowered the key rate by 50 basis points to 6.25% in September 2020. The Central Bank of Tunisia decided to raise interest rates as it tries to catch up with inflation, which reached 7.6% in May, the highest level recorded since 2018. Economists say this move also aims to preserve the value of the dinar by decreasing demand on the US dollar. Adnen, Chaouachi, CGTN, Tunis.